Hey guys, so I am going to talk to you about estimated quarterly tax payments, and this is for federal income taxes for business owners because we are in a pay-as-you-go system here in the United States. So if you have a W-2 employee job, usually you pay as you go because your employer will withhold income taxes and also your portion of the payroll taxes, which is Social Security and Medicare. And they pay that, usually every other week. Basically, whenever they pay you, they're paying the payroll taxes in short order thereafter. But as a business owner, the IRS and government still wants you to pay, throughout the year as you earn your income. But they try to make it, they try to have another mechanism because they don't have your employer, you don't have an employer to take out the payroll taxes and the income taxes. So they use quarterly estimated tax payments. And so if you have a sole proprietorship, this counts for your self-employment taxes, meaning Social Security and Medicare, and you're paying the employee and the employer portion of that. And so let me see if I can have that pop up real quick. Let's see here. Okay, so here we go. So Social Security is 6.2% for employee, 6.2% for employer. Medicare is 1.45% for the employee, 1.45% for the employer. So 12.4% for Social Security and 2.9% for Medicare. So overall, it's 15.3%. You get a little bit of a discount, about 7.5 or 7.65% discount on that. So really, you're paying 14.13%, and that's just to Social Security. So we haven't yet even talked about income taxes. So just be aware that as your business gets started up and starts growing, it can very quickly thereafter have a big impact on your tax situation. So, and it's because you're paying both the employee and the employer portion of Social Security, and you're paying your income taxes. So if you don't make these quarterly estimated tax payments and you all of a sudden have kind of a bigger year on your sole proprietorship income, it can come as a very rude awakening at the end of the year that, oh my gosh, boom, I have all these taxes. But people often say, well, how much should I withhold in taxes? And I will say, the first year or two, it's very difficult to determine that. But if you have set aside 30%, then you will have paid in a good chunk, sometimes more than you need, sometimes less. After you get a year or two under your belt and we kind of see a consistent pattern of what the growth is, where income taxes are going to fall out for the business, then we can start doing projections and give you a much better idea of, on an annual basis, here's how much you should pay in quarterly estimated income taxes. But for now, I would say we're going to include with your income tax return, if you so desire, these quarterly estimated income tax payments. And I'm showing you a generic one that is on an IRS form, but the one we send looks somewhat similar to this, but it's a little bit different. And I can't show you an actual one because it shows Social Security numbers. So obviously for confidentiality purposes, I can't show you what our form is going to look like. But it's going to have a top half that's going to have information that's just for you. It's going to say, okay, what was the date that you mailed it? When was it? How much did you pay? And what was the check number you used to pay it? Down here, all of this that I send to you will come pre-printed. It's going to have your name, Social Security number, address. Now it's going to have the Social Security number of the person who's listed first on the federal income tax return. So even if it's a spouse's business, whoever is listed first on the income tax return, that's the Social Security number that's going to go here, and it will be credited to both spouses. And so you still use it for the business taxes. Now you're going to make the check out to the United States Treasury, and up above here, when I send you our vouchers, it's going to have the date that it's due. And as you can see, these are the due dates for the four right here: April 15th, 2019. June 17th, 2019, September 16th, 2019, and January 15, 2020. But again, this is paying income taxes and Social Security taxes and Medicare taxes, self-employment taxes, paying all of that for the current tax year, because we're in a pay-as-you-go system. So again, I kind of mentioned all of these taxes. On top of this 14%, if you're in a marginal bracket of say 12% or 22%, then all of a sudden we're talking, this is if your net income, so income after deductions, if your net income was $50,000, you'd pay $7,065 in Social Security and Medicare taxes. Those are what we call self-employment taxes. And then if you're in the 22% bracket, you're going to pay another $11,000. So overall, that's $18,065. So this here assumes, okay, let's say this assumes $75,000 of gross revenues. So that means gross means before any deductions. And then you have your deductions, and let's just say we find $25,000 of deductions, okay? And then the net income, of course, is after deductions. Okay, so now we've got, so again, this is all based off net income. So you can see why it's hard to do these estimated tax payments the first year or two, because honestly, we know what the gross revenues might be. I mean, it's hard enough to predict what this is going to be, much less what the deductions are going to be, right? So this is kind of, this number I rely upon you to tell me what it's going to be. This number, is really a guesstimate the first year, trying to use a reasonable guesstimate. So the first year, I'm not going to pre-print an amount for you necessarily, but what I would say is of your net times 0.3, if like in this example, you would have owed $18,000 for the year, you would have paid in $15,000, so you would have owed an extra $3,000. So if you do with 30% of the net, you're doing pretty well. If you did 30% of the gross, then you would have paid in a little too much, and you would have gotten a refund. So you can do that 30% of net or gross. It really depends on the type of business you have. If you're a business that has, lots of cost of goods sold, like you have a lot of inventory and you're reselling stuff, then obviously you're not going to pay 30% of your gross. You're going to pay 30% of your net. But if you're a business that's, doesn't have tons of deductions per se necessarily, then pay 30% of your gross. And if you're not sure and you want to err on the side of being cautious, then pay 30% of your gross. If you're not sure and you're okay maybe owing a little bit at the end of the year, pay 30% of your net. And that's probably for the first year or two that you're in business. After that, then what I'll do is I will have a conversation as we finish your tax returns, and I will let you know, hey, I can do a tax projection in our tax planning software that basically takes what we have the current year, projects it onto the next year using next year's tax laws, and then we make various adjustments to that based on a conversation that we have together. And that way we come up with more accurate predictions of what you're going to owe in tax for the following year. There's still estimates. I'm not going to guarantee, because if there's changes during the year that we didn't anticipate, then obviously that's not going to take that into account. What's the consequence if you don't pay quarterly estimated income tax payments? Well, the consequence is that, one, you're going to owe a huge chunk of change at the end of the year potentially, and the other consequence is that you could owe a small penalty. So it's not a huge penalty, but it's like a 3 or 4% interest rate loan, equivalent from the IRS. So, but most people choose to just pay it in, because otherwise you can get in arrears with your taxes, and that can cause problems, obviously later on, because if you haven't paid by April 15th of the following year, then they'll start adding much bigger, the penalties will start going up significantly higher, as will the interest due on the taxes, because they'll start charging you interest at that point. Okay, let's see what else I want to say about it. Okay, so one other thing is, it's very important that you keep track of the top half of your of your statement, the tax voucher statement. And the reason being is that I want to make sure that you paid in. I want to know what you paid in, because it's possible that you could not pay in what I've given you. So some people will, I'll print an amount on this estimated tax vouchers, and someone will cross it off and they will pay a different amount. And so I need to know what you paid in. So just because I've given you a voucher doesn't mean that you have to pay it in. If you don't pay it in, then you're going to have to pay those taxes later on. So just know that, and there could be a little bit of a penalty. And whatever you do pay in, keep track of that and let me know at the end of the year so that I can take that into account for tax return purposes. Now, if you're not sure 100% what you've paid in, it's not the end of the world. We can submit the tax return still. If we're wrong, the IRS will correct it. It could delay it a little bit in the processing. And then, if it's late enough in the year, then we can call the IRS and say, hey, what do you show as being reported as having been paid on the estimated tax payments? But either way, best practice by far, in a way, is to keep track of what you have paid in for quarterly estimated tax payments and let me know what those are. Okay, so those are the quarterly estimated tax payments. Let me know if you have any questions. I'm happy to answer them. Just email me at jason@waterfrontcpa.com. Again, it's Jason, JASON, at waterfrontcpa.com. You're also welcome to give me a call, 360-286-2080. And I'm usually not available at that number on the weekends, but I am during the weekdays as long as I'm not in an appointment. If you leave me a message, I'm happy to get back with you. Usually during busy season, it's going to be in the evenings when I have a chance to return phone calls. Okay. All right. Thank you very much.